Prateek Agarwal, who's business head and CIO of ASK Investments, joins in with his perspective on the markets as well. And the focus really is on rural reforms. That's where squarely one believes the budget would be centered around. And that's where the government would want to kind of extend out stimulus to ensure that that side of the economy comes back in a big way. So Prateek, let that be my starting point for this discussion. Good morning to you. How are you looking at the government's rural focus in the upcoming budget?
Good morning. Sorry. No, so rural focus is always there. It's a matter of some small marginal tweaks that keep happening from a year to the next one, because what happens in a given year is that lot of the spends that will occur are committed the year before. What gets planned now, and so the spends for that can only take place, let's say, deep into the next year, and which means the fund allocation for those would not be very high. So that's how things happen. So I am not too worried about the stress on the budget because of a renewed focus on rural. Most of it would be continuity. Yes, we should expect marginal uptick in that allocation. But that said, spend anywhere is good for consumption. So if one is playing that theme, that really continues to work well.
Morning. The big news is in the IT sector today. First, Accenture upping its, the lower end of its guidance band, and then you've got TCS also winning a sizable order, $2.25 billion from Nielsen. And it's interesting, the commentary coming in from Accenture. They're saying that the order pipeline is looking visibly higher for the next calendar year, and that client spends as well are beginning to look up. Would you say that part of this positivity is going to rub off in the Indian IT sector as well, or does IT continue to be in a void?
No, it is continuing to be a state place where there is a lot of stress. The stress is on account of billing rates not moving up while the wages keep on going up, and that is putting a pretty high amount of pressure on margins. There is only so much that automation can achieve. So all of these would bump up earnings, but only by a tad. So we don't see that as a great place to be invested just now.
Of course, is in the entire ADI group of late, Prateek. What with Reliance Infra actually, selling out to the Adani group, then there is this buzz around Reliance Communications as well. Do you think time has come to finally relook the ADI group? Maybe a bottom is in place, if not a significant upside from the current levels for some of these companies, because now you're seeing that aim and motive of theirs to bring down their debt sizably, that focus actually play out. They're now, acting upon the said words.
No, fair enough, but one needs to be clear that what would be left after things are sold for continuing business, and only then can one value it and see if the current stock prices are reflective of that or not. As of now, it's in a state of flux.
Okay, give us your sense on how you're approaching the consumption theme. We keep asking this to our guests every single day. I know yeah, I caught that smirk, Prateek, but that's the whole thing. Everybody wants to talk about consumption, and no matter how expensive it gets, one is still willing to buy it at any price. So it's a trade that's not getting tired anytime soon, actually.
Yes. So our thesis is like this, that we are in a bull market which is now at least 4 years long, and all the large cheap areas in the marketplace have been discovered, So, be it metals, commodities, chemicals, be it PSU banks, every large space has been discovered and stocks have done very well over the last few years. So while those spaces may hold, going forward, clearly the growth in continued earnings, not 1 year but multi-year kind of growth, would be in focus. And I think that is where consumers really stand out. That is the only space where you can build that kind of growth outlook. So it is a large basket. It includes autos, it includes FMCG, it includes lots of stuff. So we really believe in the space. Second, the benefit of GST would accrue to spaces where the competition from unorganized is very high, and consumers are one such space. So as the move away from unorganized to organized happens, there would be some tailwinds which consumers experience to their benefit. And lastly, we should expect a tax rate cut in the budget. To give you a sense, in the US, the tax rates, the corporate tax rates used to be 35, higher than that in India, and they have cut it down to 21. And it seems most of the developed world has rates just about there. So it stands to reason that we would also see a rate cut, maybe in a staggered manner, income corporate rate tax rate cut, but almost certainly. Two budgets back, the FM had made that point. Last budget, we did move quite a few items down there. So the whole idea is that rates would be cut. Most of the infrastructure capex related sectors actually pay less than 22%. It's only the consumers, asset light businesses which pay the full tax rates. And very clearly, these are the businesses which will benefit. The full tax paying businesses are the businesses which will benefit from any reduction in tax rates. So that feeds into the overall theme as well. So I think in today's context, the earning projections that are being seen do not build these into numbers. Obviously, these factors are not certainty. But if they were to occur, then the bump up in profits for these companies could be pretty decent, and that will correct valuations down substantially.
Prateek, when you say that, the shift to organized from the unorganized theme is not over yet, what is it that you're willing to bet on? Because most of these themes have played out very well year to date already in the market. I mean, what with the moves on the Titans coming up, some of the retail plays as well have held out well. Where is it that you sense that there is some significant headroom still left in the market? Within this theme, of course.
To start. Let the e-way bill get enforced. Let's say the date is in February next year, and after that we should start to expect a pretty substantial move into organized. So that would be a big trigger. And these are initial days. One really needs to see see it over a period of time. 2 to 3 years hence, we really believe a lot of these businesses could be in significantly better shape than we are projecting today. And these would be across industries. Some of the industries we have seen some sense of it. So Titan, yes, we have seen very strong earnings, and the management has also been talking about it, that they are key beneficiary. But this is something which should happen practically across the consumer industry.
Prateek, anywhere you would be contrarian in the market right now? There's news coming in on IT with Accenture's guidance being a bit of an uptick. There being a revised contract for TCS in the works. Do you think things have bottomed out, or the data is too premature to suggest that?
No, I would believe that things have bottomed out. So we are not really believing that IT has a downside from where it is. But on the upside, how much money you make is where we have a disconnect. We still don't believe it will deliver significant EPS growth, and hence the amount of money somebody may make by being exposed to the space, at least in the larger names, to our mind would not be very substantial. Spaces that at least I would focus on are NBFCs and their the small ticket loan NBFCs. You may call it microfinance, you may call it gold. Over a period of time, people will understand that they have particularly large and relevant expertise for the day. So if low cost housing is the focus of the government, who is in a good position to lend to that segment, who has a already ready-made borrowing segment, that is their clients. So the franchisee that these kind of companies have fits in very nicely with the policy environment, the thrust of the government of the day. And for various reasons, including the stress that was experienced after demonetization, changes in regulations, etc., this was a space that was given a miss. It's coming back, but I really believe this is a space that could do quite well in the new year. Similarly, pharmaceuticals have had a very, very difficult period over the last 2 years. Some of the names there are throwing decent amount of value. In fact, we believe that given the negativity that is now beginning to be attached to the US marketplace, while it is and it continues to be the most profitable place in the world to do pharmaceutical business, the valuations of some of the companies build in hardly any value for the monies businesses are making in the US. So we believe that's unfair. Some of the pharmaceutical names can throw up surprise performance on the bourses in the next year. So I would keep my eyes there.
Okay, Prateek, great speaking with you. Thanks much for sharing your ideas and views and how the next year is going to be and how the market is looking right now. And here's wishing you a happy new year already from all of us.
Thank you. Happy New Year. Yes.
Thanks.